DXY, it's a basket of currencies against the dollar, and it is weaker, and it's been quite a bit weaker over time. It's off the lows this morning. Well, just barely. You can see that. That's over time there. You can see we've gone down to, what are you looking at there, 103? And then stretch it out, look a little bit closer. And it's been since Liberation Day, if you want to call it that.
I think it's down just over 5% for the year, maybe 5.5% for the year to date.
And I was just trying to look. It's against a whole broad range of currencies. Against the Swiss franc, I got to go back to 2011 for being weaker against the Swiss franc. The yen were also weaker against the yen quite a bit. It seemed like something happened like around 8 o'clock last night because it was down and then it ticked back up. And then the question being, are foreigners not believing in the dollar right now and that kind of stuff?
Let me throw one more into this.
Yeah.
And this is something that just occurred to me, so maybe it's crazy, but the yen, there's been a lot of speculation that the only way the Japanese can really deal with this is to weaken the yen, right? And to have a weaker yen, to have a weaker yuan, have all of these nations weakening their currency so they can deal with some of the problems that are headed this way with the trade issues. But the administration, President Trump, has said that they are coming after you not just for tariffs, but for non-tariff barriers, including currency manipulation is one of the things they've put in that. Are other nations reluctant to do anything to weaken their currencies at this point that we would see under more normal conditions? I don't know.
What I know of these central banks is whatever happens, they want to do it in a managed way. Even the
Together,
Chinese,
probably too.
Right. The Chinese are certainly going to let the yuan weaken here, but they want to do it in a managed way, and so they'll use their dollars essentially to sell their dollars, buy their currency. The bigger question becomes whether or not there are longer-term issues with the dollar not being the reserve currency, because I don't think that's an issue, but whether or not there are buyer's strike going on U.S. assets right now. Those sorts of things. I think we have a quote here from Mark Chandler, who's our go-to guy on currencies. He says the stress, and he meant the stress of everything that's going on right now, is hitting the dollar in a dramatic way. Although the greenback is paring its loss ahead of the North American Open, about half of the G10 currencies have gained more than 1% against the greenback today. And look, it's great if the stock market and the bond market can remain immune to that, but the question becomes, what is the role of foreign... I want to tell you something amusing in this whole thing. Somebody last night said to me, if President Trump is angry that other countries are taking advantage of us by buying our debt, wait till he sees how it feels when they stop taking advantage of us.
Well, and David Faber tweeted something this week, put it out on X this week that was hilarious. It's an old quote that I had forgotten about from James Carville, who said, he used to want to come back as a pro ball player or something.
Right.
In his next life now, he wants to come back as the bond market, because the bond market intimidates everybody.
It could be a currency trader, too. Well, we have to watch it. It's good that bonds and stocks are doing okay, but we've got to watch what's happening with the weaker dollar.
Okay, Steve, thank you for that. Appreciate it.
When we come back, Minneapolis Fed President Neel Kashkari will join us. Squawk Box back after a quick break.